How's it going, guys? CryptoBud here for today. In this video, I'm going to talk about a very important piece of news that most likely is going to have a large effect on the Bitcoin crypto market economy. Okay, this is going to be one of the few times that you're going to see the real world and crypto intersect in many ways that you have not seen before. And before I move on to this, I want to make sure you guys are aware that whatever happens in the financial market has a very large impact on the crypto market. Most people refuse to believe that they're not interconnected, but in reality they are very interconnected. In fact, I do think they have a symbiotic relationship with crypto and with the mainstream financial services. And although I do believe that most people here want to chuck the entire financial system out the window, the reality is that we're intertwined. So that's where a lot of the problem is. Now, when I was working in Wall Street a long time ago, one of the things I always looked for were these shifting, what I call macro trends, or what we call these specific policies that will reshape the entire financial market and how to best adapt with them. And what I saw today and what I'm reading today, a little bit about the policies that are being enacted both in the US side and also on the Chinese side, has got me a little bit worried, not so much about crypto, but more about the whole economy as a whole. And so as you guys already know, my background is in economics. I did economics as my undergrad. I did a lot of research at that time on monopolies and also a lot of research on firms and specifically government policies that work towards trying to deal with some of these problems as they kind of creep up. Okay, so let's go ahead and take a look first before I go to crypto. All right, so first off, on CNBC, the news was this, that China responds to Trump's tariffs with proposed list of 120 U.S. products. For those of you guys who don't follow CNBC and any of those outlets, this actually creates a huge problem, because even if it were not true and even if the impact is low, the fact of the matter is it does have a psychological effect on the political system for both the U.S. and also the Chinese. Now today the stock market took a huge hit. In fact, if you kind of take a look at both indices across the board, we have the Nikkei, the Shanghai, across the globe, we have everything kind of going down. Now later on, I'll get back to what's the connection with crypto. So just kind of bear with me a little bit for those of you guys who are not interested in the stock market. That's perfectly fine. Now, basically what ends up happening here is on the world economy stage, we are more global than ever before. In fact, if you think about it for a second, all the goods that you have in your house right now have all come from a foreign country, be it China, be it Singapore, Vietnam, anywhere else, and vice versa. Any other Asian country now has U.S. products as well. So there is a trade balance that needs to be maintained, and an order that needs to be maintained on both sides of the country. So there is not one country making everything anymore. In fact, everybody is participating in this global economy. What happened was China decided to impose 128 U.S. products to target, what we're called reciprocal tariffs. Now, basically what that comes down to is this. The U.S. decided to initiate a tariff on specifically steel and also any sort of capital goods on for foreign countries. And the other side responded with, okay, you guys are going to do this. Now we're going to do this with another tariff. Now, 128 U.S. goods, it actually expands across multiple different ones. These include pork, wine, fruit, and steel. Now, what's happening right now is if you take a look at the actual import value, the import value that the Chinese are proposing only has about $3 billion in US. Okay, this include wine, fresh fruit, dried fruit, nuts, steel pipes, modified ethanol, and ginseng. The products could see a 15% duty with a 25% tariff on it on US imposed on US pork, recycled aluminum, according to the statement. Now, in terms of the Chinese, they've also retaliated against on the other end, and now what's happening here is they're going to go ahead and appeal and do some legal action under the WTO. Because of this, a lot of the financial markets are taking a hit. Now, pretty much if you take a look at the import-export relationship, Chinese imports from the U.S. are pretty much $172 billion. So the target of $3 billion is not so much. However, this can quickly escalate to in the hundreds and hundreds of billions of dollars. And also it damages the multilateral trading system that's already in place since the last couple of administrations. Now, the Trump administration has also signed an executive memo that will impose up to 60 billion in Chinese imports. This is going to trigger at some point definitely a global trade war. Personally, I'm a free market capitalist. Trade wars, basically what they do is they create a tit for tat situation where markets begin to impose these duties so that the other country suffers in retaliation for what the other country did. And every single country has their own interests at hand. Now, where it gets a little interesting is if you kind of take a look at some of the, let me take a look at Bloomberg here real quick. Basically, the tariffs on here on the White House press secretary, what they're doing is they're signing off on the modifications for these tariffs, and they're going to basically address them as a U.S. national security piece. And the tariffs are still continued on certain countries. So pretty much steel and aluminum production is going to be at some point constrained. Okay, so in other words, you're not going to have that free-flowing steel coming into the U.S. and also to other countries, as every single country now is going to impose their tariffs. And what's going to happen here is that in order for this one to go into effect, it's going to be an interesting idea because the exemptions are actually going to be for the following countries. So EU, European Union, Australia, Korea, Brazil, Canada, Mexico, and Argentina. Mostly in the North American countries, in the North America countries as well. And also, I want to say that these other ones, you could kind of see which of the sales are going to be at risk going to China. So if you take a look at this one from Bloomberg, they put this out in saying that the capital goods, excluding automakers, are going to be in jeopardy in terms of exports, industrial supplies, travel services, food, and auto parts and vehicles. And so what's going to happen here is that as these countries, as we start getting into this trade war about aluminum and steel, the price of everything is going to start going up, specifically for the consumers, right? So if I want to buy something, a cheap product from China now I'm going to be facing a 15 or 25% tariff. And on top of that, the Chinese are also going to face a problem on the other end. So it doesn't take a genius to figure out what the ramifications are. When a country goes into a tariff mode or a protectionist policy, what ends up happening is the consumers, the people, are going to be the ones who are going to face the brunt of it. The reason why is because most of the goods that are being sold are usually accessible for the mass market. The second problem is you're going to have a trade imbalance between these two large countries. Either we export more, they import more, or whatever the case is, and that's going to put pressure on the currencies, because now what's going to happen is if China decides to find another country to work with, which they can, by the way, because they've already developed those relationships with them, then at some point we're going to have to either devalue our currencies to deal with the inflationary problem, okay, or cut the interest rates at some point to bolt the economy back up. Now, these are the same problems we had a couple of years ago, okay? In 2008, what we had is this whole global credit crunch. Access to capital was a problem at that time. Now what we're facing here is a whole different dilemma, because now it's going to be affecting the job market. When it affects the job market, the government has really only two choices there. One, increase government spending, which would offset the problems with the tariffs, because people would be out of work, because now they can't export to these other countries. So they would have to go domestic now and just sell it back to us. But then all the prices are higher, so they would have to spur up government spending or subsidies to allow people to buy these goods. Or two, if they can't increase spending, which I don't think they can because of the control of the houses, both the Republicans are controlling both houses, is that they can probably most likely devalue the currency. Okay, so again, this is a recipe for I think, a geopolitical problem that I think it's going to get even worse as time goes on. And if these trade wars begin to really kick in, I really don't want to root for Bitcoin at this point, but most likely it's going to do that because I think a lot of people are going to lose their jobs in the short term. In the long term, sorry. In the short term, the companies are going to gain an extra advantage because they're getting favored over expensive foreign products, cheap foreign products. And so I guess the question here you want to ask is, how is that going to affect Bitcoin's price? So Bitcoin's price is really tied to two things. Number one, it's really tied to the simple fact of this. The price of Bitcoin is really tied to the geopolitical risk that exists. It's a store of value at this point, not so much a transactional currency as most people think it is. The second thing I think what's going to do is that Bitcoin is going to be a safe haven in case the currencies begin to depreciate on both sides of the country. So remember, China has always manipulated the currencies on some level. By lowering the price of their currency, they're able to make their exports cheap. Now with the tariffs being put in, that's going to put a problem, a little kink in this factory, because what's going to happen now is they're not going to be able to export their products at a cheap price, which means they're going to have the same problem, which is going to be having to deal with figuring out how to devalue their currency even more so they can eventually export some more. On the US side, then we got another problem as well, right? Because now we're not going to really feel it, but we do have a large population right now that is still developed under these main industries. For example, in California, our agricultural industries are actually one of the largest ones, and we do export a lot of nuts and a lot of different food products across overseas. With the large tariffs, that's going to put a lot of the states into a couple of problems. Now, if you're not living in California, but you're living in another country that perhaps maybe exports wine or any of the other products that the Asian market, specifically China, imports, like pork, for example, then what's going to happen is that these companies are not going to be able to remain competitive, which means that eventually they're going to have to downsize, and now that creates another problem. So spending is going to be a huge problem overall in the US markets because people are going to have less as they get laid off of their work. Now, this is a double-edged sword because now the economy begins to stall a little bit and we may enter into a recession, I guess you want to call it. And then now we start entering into this phase where people are not going to want to buy crypto. Then we also have the problem with inflation. During the 2008-2009 crisis, there was a couple of situations where the government decided to release what I call quantitative easing, which meant they're basically just kind of money that got thrown around so that we can kind of clean up a lot of the toxic assets that are in there. That money hasn't been flushed out yet out of the system. In fact, that money is still on the balance sheets on the Federal Reserve. With the interest rates going higher as inflation begins to creep its head, there is going to be a more expensive debt that they're going to have to pay back. And so now you have the problem of how do you pay back old debt by the old mentality of doing QE. And then at the same time, you got a tariff that's kicking in here that's going to make everything more expensive. So I do think that the big guys, the rich people, I guess you want to call it the owners of these companies are going to do very well. The problem is the consumers, the you and me who go to Walmart or any other store, and you're going to find that the prices are rising slowly, but enough to make a dent into the paycheck. So what's going to happen here is Bitcoin is going to be the go-to currency now because that's the only way to offset that. So I'm not going to sit here and hold on to fiat and watch fiat go down in value because of these policies that were geared towards protecting specific industries. Now, how do I think this is going to play out? The only way I can see Bitcoin going up at this point, guys, is a couple of things. Number one is we get new buyers in, everybody goes into crypto mode, which means we believe in the fact that this is going to be used as an alternative currency on some level. Or the other one is that it forces people to use this as an alternative currency by the ravages of inflation. And I do think the second option is a more reasonable and realistic option because I think inflation is going to really kick in the next couple of years. We didn't really have inflation from 2008 to now, which is really surprising how much money was pumped into the system. Asset classes are right now at all-time highs, both the stock market, real estate market, and crypto has definitely had a major correction, but I would say it's still kind of somewhat elevated. overall, we have a lot of money that has basically been rushed into all these different assets. And now that money needs to go somewhere, because as the price of everything begins to rise, it's just going to push everything off the cliff. All right, so in summary, how does this apply to my overall perspective of trading and investing in crypto? Well, this kind of reinforces my idea that geopolitical risks are going to be a huge problem and a huge theme in 18. In fact, I think that's going to be more of a disruption than actual regulation. Although I do think that regulation is definitely going to be another one that's going to slow down a lot of this momentum. I do think that the geopolitical risks are enough, in my opinion, to offset some of that. And the only reason why I think that is because the world's becoming much more unstable by day, between trade wars, between escalations in certain countries, between Venezuela trying to do a petrodollar with Russia trying to work together. There's a lot of risks right now in the system, and I do think that the people are going to try to find a safe haven. And the only thing I can think of, the only reason I can think of that Bitcoin has over all the other assets is that you have control of your money, right? You're not at the whims of some sort of trade war that's being enacted for whatever reason. You're not constrained by how certain banks are going to use your money in certain ways. And I do think that will continue to be a theme until the financial system begins to get finished and cleaned up by where the powers they be. On a last note, I want to say that interest rates have been creeping up a little bit. And the only reason why they would do that is because of inflationary expectations. And so I do think that's going to be a reoccurring theme in the next couple of years. All right, guys. Well, hopefully you found this informative. And I want to say one more time, boom shakalaka. Hopefully we have a massive Bitcoin run. Because I do think this is going to be the catalyst that's going to do it. That's going to tip it over, and it's going to shoot Bitcoin up to 25K. I don't think we can do it without any sort of geopolitical risk or geopolitical agenda, because as you already know, Bitcoin is a global phenomenon. And because of that, now we are so connected and we are so interlinked with every single financial asset right now that you would have to be able to be plugged in into this other world. All right, guys. Hopefully you enjoyed the video. Crypto Butt out.